Hello guys, and welcome once again to my YouTube channel. I hope you're excited, and I just wanted to break down with you some of the trading opportunities that I'm looking at for this week on synthetic indices, on synthetic pairs. Right, so on the synthetic pairs, you can see that we have a strong resistance there, which is actually a previous major swing lower high, according to our strategy. That is swing major lower high there. Right, so us having a swing major lower high there, us having a swing major lower high there, and was swing lower low there with another lower low here. So this might most probably be a simple double top, and once the double top, it has to come all the way and break the previous low like that. So this is the current bias. I have my trend lines, I have my resistance zone. I also have my trend line at the bottom there, which is also close to another zone as well. So this is will be the first swing target there. So basically, the buyers we are looking for selling opportunities. We are looking for selling opportunities. We are looking for selling opportunities there, as you can see. We're looking for swing sell opportunities, right? So what I do once I've done the analysis like that on the daily, what I just do is to go down to 4 hour to get either further confluence. Let's see if with any other extra confluence there. Right, this is the 4 hour time frame. 4 hour time frame. This is our major resistance, which is our swing lower high. If you can see this supply there, the top was mitigated, so no need for the market to come back there. What I like now is that we have a zone that the market was failing to break, and it is actually broken now. It's actually broken and retested the zone, which is there on the red line where I drew the zone. This was a major support where the market was failing to break. So now once we break there, our first target, our first internal target, now we can target this low here, right? This previous internal lower high, right? Internal higher low, I mean. Internal higher low, because it can do something like, once it breaks this internal higher low, it means order flow is now shifted. We're now in bearish order flow. And once it's now like that, it can even give a pullback before a continuation. So that's why I'm saying this can be someone's first internal target. But the major target, remember, it's a swing trade. But this one can be your first internal target like that. So once I have my first internal target like that, what I now do on a 1 hour, 30 minutes, I'm just looking for an entry point. Remember, the zone has been broken and retested already. That is actually a good selling opportunity right now that I'm currently seeing. This was the zone. It touched, broke out, fake out, went back up, fake out, broke out, went up, broke out, went up, broke out. So now let's look for another confluence that we can add to this particular trade. Another confluence that you can add to that particular trade. Remember, I said there is no need for the market to come all the way there because that supply there, the top has been mitigated. So we're no longer talking about that. Let's look for another confluence. I can actually see that here we have this counter. So already we now have another confluence on the 1 hour that can help us to jump into this particular trade, right? That other confluence is this that trend line there, right? So the same is the same here with 1 hour. That's the target there. Once you see that one being broken, it means we're now going all the way to the downside, right? So this is what I'm looking at on even here coming down. You can see that we are forming simple lower highs like that, just being a confirmation that we're now going down. So it's sort of like an asymmetrical triangle there. It's sort of like an asymmetrical triangle, and then asymmetrical triangle, it can break either ways, but here in this particular case, we're expecting the break to happen to the downside. Breakout there, we enter our stop loss above the triangle, just there like this. First target is that. Right, so this is the trade that I'm looking at right now on Boom 500. Just to save your stop loss, we just put it just a little bit higher like that, or just above there. So this is a trade that one can actually take, especially after the breakout of this counter trend line there going up. So once it breaks there, you can actually enter your sales. First target is there, because now, if ever it wants to continue going up, right? I want you to listen to me closely. To the left here, this was a break of structure, right? You can see, we can all see that this is a break of structure, clear break of structure, right? So that break of structure now, if ever the market is going to continue being bullish after this break of structure here, remember, after that break of structure, a proper structure here is this one. We have that high, we have this higher low, right? We have a higher high there. So long this higher low is not broken, it means order flow will still be bullish order flow. And once order flow is still bullish order flow, the market can still play around going up. So in this case, it can even come to this extreme order block, which is where our target is. If ever it wants to go up, it can actually come all the way down there. Fail to break there, shoot all the way up, right? That is if ever it still wants to maintain that bullish order flow. But once you see it breaking this bullish order flow here, once bullish order flow is broken here, we expect this will now be a change of character. Once it's a major change of character, we expect a pullback. It's just creating a lower high, lower high. So it will now be a bearish order flow market. So, but basically, this is the particular trade that we're looking forward to. Just wait for the break of this, then you jump into that particular trade. So you can even refine this entry to as far as 30 minutes, even 15 minutes. So you see, touch, broke out, went back up. So you can simply wait for that. Once it completely comes down here, you can actually enter your trade. Another confirmation here, you can also see another confirmation as well on the 30 minute that I would like to see. So this market will break below here, this other region there. Once it breaks below that region, it will actually be a good entry as well, this region, right? So here, someone can enter there, someone can choose to enter here. Both entries, they are also okay. Both entries are still okay, especially this one. Is touched, meaning if ever it breaks now, there's a chance that it can go all the way down. Once it goes all the way down, it will create a change of character, then pull back up before the continuation down. So this is the trade that we are looking forward to, and I hope you're going to make money with us. If ever you're not in my signals group, if ever you're not in my free groups, you can join my free groups in the Telegram link that is in the description. There's a Telegram link in the description. There's a WhatsApp link, there's a Discord link. You can join me and my team through those links in the description. If you want to contact me directly, you can contact me through the WhatsApp number in the description as well, and be part of my team, be part of my community, where we make money for a living each and every single day out of the financial markets. So guys, this is my bias on Boom 500. This is my bias on Boom 500. Let me now move on to the next pair, which is Crash 500. Right. Crash 500, I did an analysis already, but let me just remove that. Let me just remove it. Right. So crash 500, it's been an interesting downward market, as you can see. So overall, looking at external structure, right? Looking at external structure, you can see that we have been in a bearish order flow market for a very long time. How do I know that we have been in a bearish order flow market? This creation of this swing lower highs, swing lower lows, swing lower high there, lower low there. So let's look at my previous. Where is my previous swing lower high and swing lower low? My previous ones are this, right? So this one here, swing lower high, we came and broke structure at the bottom here. Came and broke structure at the bottom. So that was a major break of structure, as you can see. Break of structure there down. So that break of structure down, let me just label this as my swing lower high. Swing lower high there. Like that. Right. So if you check, it hasn't been broken as yet. So meaning we're still in an overall bearish order flow market. We're still in an overall bearish order flow market. So us being in a bearish order flow market, I want you to look at something so critical here. So according to our strategy now, if ever we have a lower high like that, and where is our lower low is this one, which this one I'm expecting to be broken. Why am I expecting to be broken? If it's not broken, it means the market will just come and reject there, right? That is if ever the market now wants to reverse to go up. But that's a weak swing low. That's a weak swing low. That one is a strong swing high. But why is it strong? Because the swing highs, if you check, they're not being broken. But it's actually the weak lows, the swing lows that are being broken. So this is a weak swing low. That can be the major target for this move that is happening down. How could you have caught that move? It was a simple trade, taking your Fibonacci from the top to the bottom. You realize that we respected 70, we actually at 78.6 Fibonacci retracement, which is also a high probability Fibonacci zone there. You can also see to the left that we had a where the kind of resistance there. It restricted here, restricted there, broke below, came and restricted again there on the zone. So it was actually a resistance zone as well. So there was a resistance, number one. Number two, there was a Fibonacci retracement. Number three, one can also see maybe a possible trend line there. Right, someone can draw a trend line like this. Someone can draw a trend line like this, which is all okay, but those are not proper trend lines. But it's just a rough idea of wanting to show you that the probability of the market dropping from there was high. So I could have sold there. Your target, remember, is this week's swing low. First target, second target, negative 27, third, fourth target. So these are my TP targets to the bottom. TP1, this TP1 here, TP2, TP3, and TP4. Obviously, I combine with other confluences like the trend lines at the bottom there. But so far, that will be my major targets according to my Fibonacci strategy. So here you can see this counter trend line. It was going up, going up, going up. It was broken here. So the market can most probably come to retest. Coming to retest, there's also coming to confirm with this internal change of character that happened here. Internal change of character. Internal change of character. That's an internal change of view. Internal change of character. Right, internal change of character. So after an internal change of character, expect a pullback before a continuation. Let me just hide this. Let me just hide this. So internal change of character, it can even pull back all the way into the trend line there, which is a zone where we have a supply as well. We have a supply in that zone. So if it pulls back from where it is now, it will be something like this. So you can also expect further sales around 61.8, 78.6 region there. That's where it can actually pull back like that before a continuation down. So now all I'm expecting is a pullback into that zone that has been broken. Right? So this is the particular major analysis on Crash 500. This is the major analysis. Right now we're expecting a pullback. There you could have sold, targeted this internal higher low there as your first target, then that low at the bottom as your next target. That's how you could have actually placed your targets there. So going down to 4 hour, I'm just going, but overall the analysis you've actually seen. So now what you can simply do is to if you want to enter those counter buys. So here, if I refine the zone according to 4 hour, it's most probably this supply. Right. So this is what we're looking at on Crash 500. Let's look for extra details that can help someone as well. So now, if you want to enter this counter trade, what you simply need, if you want to enter this counter buys, what you simply need, you need internal structure to shift. Because remember, as it was going down, it was doing like this on a lower time frame. So on a lower time frame, we have to have this internal shift in order flow. Then we know that we are now most probably going up. On a lower time frame, I'm referring to a 30-minute, 1 hour, 15-minute. We have to see that internal shift of internal order flow. This is the internal lower high, right? So it has to be broken before this market can go up. Remember, we always buy low and sell high. There, it's a premium zone. That's where you expect to enter more sales. If ever you entered sales already, by now this target has been reached. So wait for the pullback before the next sales. Before the next sales, wait for a pullback. Wait for a pullback before the next set of sales. Right. So this is what I'm looking at. Just to break here, then go continue going up. Let's go down to a much lower time frame. Here already you can see something like a trend line breakout, okay, which is also a first sign that most probably we can actually start to have our reversal buys. First sign that we can actually start to have our reversal buys, right? But it also has to come and break here, because if it fails to break there, this trend line breakout, it will be as good as useless. So it has to come and create that change of character there just to happen. So there are two scenarios, two entry points that I'm currently looking at. If ever you had entered here on the trend line breakout, you are safe, you're okay. But that's also a simple, easy textbook setup or textbook entry. This trend line breakout retest, that was a simple textbook entry here. You would have bought there. The next set of entries, this demand here, it has been mitigated. So the market, it can even come back again, but it has already been mitigated. If it coming back again, you can also enter there. You can also enter there on that demand there. Let's go down to 30 minutes. Right, 30 minutes, we also have an unmitigated one, which is here, which is where the market can actually come back to now. Because this one was mitigated, that one, it was left behind. So it can actually come back all the way into that zone. So now on 30 minutes, what I like on 30 minutes is that here already we have an internal, sub-internal change of character. We have a sub-internal change of character. This one, I put it like this, right? Sub-internal change of character. Then this one, that's an internal change of character, which is the one that is going to confirm fully that we are now, this one will confirm fully that we are now going up. It comes and fails to break there, it can still. So this is what I'm looking at now. Long position, one can enter a long position there, right? You can enter a long position there. Your stop loss below, just below like that. That's the first entry point. Then the other entry point, sometimes they can even come and test this low here. Coming and testing this low, they're simply coming to take people out using this inducement. So they can even come all the way down here and reject here. So them coming down all the way down and then rejecting there. You can also buy there, your stop loss below, the candlestick that will be there, then you will hold all the way to the upside, right? Those are the two entry points that I'm particularly looking at, especially this one. So this one, you wait for the market to come to the zone, wait for the market to come to the zone, then it rejects and close above. Once it rejects and close above, you enter stop losses below here, then we go all the way up. So this is also a good trade that I'm looking at, a good setup that I'm looking at on. So once you come and establish this change of character, it's now an internal bullish order flow. Once it's an internal bullish order flow, it will form internal higher highs and higher lows as it will be going up. So for example, it will give something like once it does that change of character, higher low, higher low, up until it reaches that region at the top where we're expecting it to go onto. So those other internal levels, you can simply use them to shift your stop loss. If you want to shift your stop loss to entry or to lock some profits, you can use those other internal highs. These internal highs here, these internal levels, you can also use them to shift your stop losses. If it reaches there, you know that you shift your stop loss to break even or lock profits. Yeah. So this is the structure that I'm looking at on Cash 500. I hope you're going to make money as well there. Remember, the ultimate target of this push to the upside, the ultimate target is all the way there. So you can even decide to hold all the way there, all the way up, then coming down, you come down with it. You hold all the way up, then coming down, you come down with it. That's also another wise way of treating that particular trade there. That's also another way of treating that particular trade there. Right, so this is a very beautiful setup. The signals, obviously, I'm going to share the signals as well with my VIP signals team. In my VIP signals team, that's why I give the accurate signals as well. So if you want to be part of my VIP signals group, you can also contact me through the WhatsApp number in the description below. So this is the Cash 500 setup. I showed you the Boom 500 setup. Last but not least, I'm going to do my favorite pair, which is my day one pair, which is volatility 75. This is one of the pairs that I've been trading for so many years now. And I can actually tell you that I now understand its rhythm. I now understand its language. More than anything else. So Let me just take a look at what is happening on my favorite baby here, the volatility 75. So volatility 75, order flow on a higher time frame, it is actually, let's see, okay, let's see if order flow is shifted. Major order flow, I mean, I'm referring to major order flow. Lower high, lower low, right? Where is our next lower low? 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 Our next lower low, you can see this one. Lower high, this one. Lower low. Then we came and established a change of character to the upside. Change in character date simply meant that order flow is shifted from bearish to bullish, right? So these other highs at the top, they are going to be simply targets. This one can also use this as a target. That supply there, you can also use that as a target, right? But remember, after every change of character like this, after a major change of character like this, we expect the market to tap into discount demands that have been unmitigated discount demands. Do we have any unmitigated discount demands? Yes, we do. So you realize that above every unmitigated demand, if ever it's a strong one, there will be an inducement. And an inducement, it's not a fake. I can't say it's a fake move. It's a move. It's an actual move, but it's an intentional move that the institutions do to generate liquidity, so that in the future or in the near coming move, they'll come and take out that low, then go up. So them taking out that low, they'll actually be confusing a lot of retail traders and a lot of smart money traders, because them taking out that low, people will think that maybe there's now a change of character. The market is now coming down. Yet no, it's not coming down. It's actually taking out inducement, which is one form of engineered liquidity. So here, what the market is basically doing right now, it's also collecting liquidity. Remember, here to the upside, you can see we have let me put, right. So I have two things here. I have sell side liquidity. I have sell side liquidity. I also have buy side liquidity. That is buy side liquidity there. So it's doing whatever it's doing now. It's taking out this buy side liquidity, right? Buy side liquidity is simply going to be the fuel that will need to come down all the way into this zone, right? What this market must not do, what it must not do in order for it to reach where we want it down, it mustn't come and break here. If it comes and breaks this high, it is violated. It won't come there, but it might come anywhere around those regions, because this will now be your eternal higher low. Because right now, according to structure, this was a high, low. That's our higher high there. So we need a higher low now. A higher low we don't have as yet. If this one goes all the way and breaks there, this will now be our higher low. Once you now have a higher low, it will continue all the way to those levels that I marked at the top. But so far, we don't have a higher low, which I'm expecting it to be formed around this region here, right? Then once it's created there, shoot. So that's actually one of the swing trades that I'm looking forward to in the next coming weeks on the VIX 75. One of the swing trades that I'm looking forward to in the next coming weeks on VIX 75, right? Right. So this is one of the swing trades that you just need to keep in mind. But so far now, remember I said it mustn't break there, right? If it mustn't break there, where can one take their sells? Where can one take their sells? We are taking out this. So there's a higher chance that it can come to this supply here. Tap into that supply, tap into that supply. then drop, and it's almost there. I think it has a day, just needs a day to touch there. So touch the supply, then drop, check out sell side liquidity, then go. This is the move. This is the move. So where is our opportunity? Our opportunity is going to be swing selling here and swing buying here. Swing sell, swing buy. Those are going to be our two major opportunities on volatility 75 for this week, as well as the next coming weeks of August. That's going to be our opportunities. That's the opportunities that we're going to be looking at on volatility 75 for this week and the next coming weeks. So I think we are done. I think we are done here. I think we are done here. I think we are done here. I think we are done here because the agenda now is to wait for the market to tap into this zone. So no need for me to even go down to lower time frames, 4 hour, 30 minutes, 1 hour. Just wait for the market to come into this zone. Once it comes into that zone, that's when you can go to 4 hour, 1 hour, wanting to get an entry point coming down. So all those signals are going to be shared in my signals group, VIP signals group, as well as in my free community. I'm also going to say a signal or two this week. So if you're not part of my community, join the community in the links that are in the description, and as well as contact me directly. There's a WhatsApp number that is in the description. Contact me directly as well there. Communicate with me and get as much help as you need in order for you to make money consistently trading these synthetic markets or any other forex markets that you might want. So these are the two swing trades that I'm looking at: swing sell, swing buy on volatility 75. So guys, thank you for watching. I hope you like what you just saw in this video. If you like what you saw, just like the video, share the video, subscribe to the channel, join my community, and the links are in the description. See you in the next upcoming videos.